there's a lot being said about energy. Our take really is that forget the macro, but one thing that's absolutely happening is the consolidation in the industry. Um, and you've seen, Santos doing DD on oil search, and that's likely to proceed. Ampol is doing DD on Z Energy, and then obviously the well publicized a merger between Woodside and BHP Petroleum's assets. So there's consolidation happening, and the simple fact is. Cost of capital is rising. The industry as a whole is shrinking. That diminishing oil demand, which was some were touting as happening as in 40, 50 years time, maybe bringing forward a little bit, likely to come forward a little bit, and that means a smaller but larger industry and more scale players. And so we believe, that's likely to also now cascade down to the small to mid cap space in the energy sector. And two players that we like is Beach and Cooper Energy. But Beach in specifically has had a pretty rough time. The recent Investor Day alleviated some of the concerns around some of its projects with investors, and then its recent LNG deal with BP was also a very good positive that it could go out and market on its own LNG products. So we like Beach. That had a really good bounce from its lows, but that whole sector consolidation theme, I think, starts to cascade down to the mid-cap space. So that's one we hold, and that's one we like.
Okay,
Beach Energy.
That's Beach. Zach, now we've seen obviously with those rising bond yields, that's a concern for those tech stocks, perhaps crimping growth going forward. So how then do you play that?
Yeah, so I think, like I said at the top of the conversation, how do you generate alpha going forward? And I think you've got to come back to companies that are genuinely adding sort of value add and increasing the efficiency with businesses operate in this very digital world. And Megaport absolutely comes to mind. The cloud connectivity it provides to cloud service providers, its network is got a lot of scale in it, and I think these are the companies that we already hold. But these are the companies that I think investors should be looking at if there's any healthy pullback in valuations, because the yields would really just drive the valuation sentiment. There's nothing absolutely wrong with these guys operationally, and they continue to deliver earnings at a healthy clip. So yeah, look, in an environment, again, thinking about the post-COVID world alpha drivers and a healthy pullback in tech stocks, we would think Megaport is one that clients should keep on top of their watch list as well, and one we own.
All right, another one you're looking at in the tech space, Vection Technologies. Now, it's probably not on too many people's radar here. Tell us a little more about it.
Yeah, so look, we came across this stock. We've had a number of meetings with management, and you're absolutely right. This is one that probably not too many people know about. It's a very small cap stock, and it's one that we're doing a lot of work on. And one of the interesting things about this stock is that the company is building a global platform of emerging technologies. So within technology sector, you've got well-established technologies which are probably approaching their maturity, if I could even use that for the word technology. But there's within that segment, the technology segment, there's new emerging technologies where the iterations and the development of this technology is still taking place. And so Vection is doing a lot with these new emerging technologies, and specifically it's using VR and AR to enhance the digital transformation of companies around the world. And one of the interesting thing about VR and AR is it's still not mainstream. It's kind of still going from technology to watch to technology to use. And I think that's the process behind that is still that it's still going through iterations of how to actually implement it. But what the interesting data point there is that VR and AR in its growth trajectory is where smartphones were in 2008. And if you look at the kind of operational efficiencies that VR and AR can deliver to businesses, you're looking at 30-45% uplift in efficiency gains. So eventually, whilst there's no doubt from top down, industry leaders are still looking at implementing new technologies, and more importantly, they're looking at ways of disrupting their own sectors and industries. In fact, a KPMG survey revealed as much. That's what CEOs are looking to do. Then an emerging company like Vection, which has got a global platform, and and with room to invest. In fact, these guys are already, underlying EBITDA on our back on the envelope numbers is already positive, and they're expected to double revenue as per the company's comments and recent updates, double revenue over the next year. So they've got room to invest, and they've got an emerging technology platform which could really, be a game changer on a 3 to 5 year view. So this is a stock that we think is really worth people keep an eye on, and certainly we're keeping a close eye on as well.
Well, you've given us 3 or 4 stocks to keep an eye on currently. Zach, always good to get your view. Thanks for joining us on Banyantree.
Thanks, Andrew.